So I'd like to start out a little bit talking about possibly talking about MLS. Let me just see something here. Here we go. Okay, so my just a few remarks about the market. So I think really it really behooves you to keep up to date in this market. It's a skills-based market, and it's also a very confusing market because the situation in different parts of the country is much different. And I think our market is really doing very well, considering a lot of the damaged areas up in Fort Myers. They're kind of seeking their own, with people taking the insurance money and selling the property for land value. Some others are taking the insurance money and restoring and then going back on the market. So I think we learned from talking to the people up in Mexico Beach that it's about a 50-50 mix between people that are going to take the money and sell for as is or for land value, and those that are going to fix their place up using the insurance proceeds, and others and either stay there or go back on the market at a higher rate. So what we have today is a market that's, even though still very much a seller's market, as we saw in last month's stats, with only an average less than 4 months of inventory, we still see the improvement that we've seen since last November, December. So take a look at the market and the market watch. You have this widget on your MLS dashboard. So, but look at 900 new listings, 800 sales, 1,100 pendings, and 1,000 price increases. So as I always say, take the 900 new listings and add together the 1,000 price increases. So there's almost 2,000 new opportunities on the market. And so that's an ideal place to start looking if you have a customer that's interested in a particular area or neighborhood. But I think, it's a good idea to have an elevator speech people say, well, how's the market? How's the market? The market is improving. The market has more choices for buyers in terms of new listings coming on the market and people adjusting their price to be more competitive in their market. So a lot of positive things going on in the market, but if you turn on the nightly news, you'd never know that. They're talking about prices going down and banks failing, all kinds of things. But in our market, I think we're still relatively healthy. You notice from last month's stats, the list to sell has gone down from close to 100 down to 95, 96, but it isn't going below that. So that's telling you that prices are more flexible than they were, but not cascading downward. So I think, overall, if somebody says, how's the market in Southwest Florida? The market is improving. There's more new listings coming on the market, more people adjusting their prices to fit the current market in their neighborhood. And there's still quite a bit of sales activity. And look at the pendings are starting to increase to greater than the sales. So overall, the market's improving. We always tend to have more contracts that we write in May, June, and July, April, May, June, and July. After Easter, obviously we all know that the market changes. A lot of people leave that were seasonal renters and seasonal attendees. And so we go to a little different pace in traffic and in town and in the restaurants. And I think a lot of people, especially buyers that are interested in the market, find it much easier to come down after season, spend a little bit more time. Obviously, we as agents can show more properties during the day because of they don't have as much traffic. The guard gates are not as hectic. So good idea. You know, a lot of people still believe they'll get a better deal in summer. I'm not sure that that's ever been proven out, but if your buyer thinks that, then say, come on down. So have a little bit of an elevator speech that summarizes in a few sentences what the market's doing. And I think we have good news to share. So the next thing we'll do today is we'll talk a little bit about the differences between the FAR/BAR and the NABOR contract. And I'm going to start out with some slides from my friend Sam Saad, who does an excellent presentation. Sam is a great real estate lawyer in town, and he and I chaired the Legal Resources Committee last year. He was vice chair, I was chair, when we updated the NABOR contract during our 2-year update cycle, and we got everything out in everybody's hands prior to the season. So Sam's a great guy, and I just thought I would use his slides today and then talk a little bit about the matrix that you can have comparing the features in the contract. But it's very interesting to look at some of the differences between the contracts. And so first of all, there's a series of entries in the start of both contracts that talk about what conveys and what doesn't. And here he's comparing here across the two contracts. So one of the big issues always with the FAR/BAR contract is the washer and dryer don't convey unless you put them in there into the inventory in the contract. The washer dryer is mentioned in items that convey in the NABOR contract. So in a lot of markets, other than our more resort-oriented market, people take their refrigerator and their washer dryer with them because they're personal items, and they've had, you know, obviously used to wash their personal clothing and everything, and also the refrigerator, because that is also a very personal thing. But in this market, being more resort-oriented, we have a tendency to have the washer dryer and all the appliances remain as part of the transaction. The NABOR contract has a more comprehensive definition of what items convey, including landscaping. The FAR/BAR contract is not as detailed in terms of what conveys and what doesn't. And the FAR/BAR contract really has a very limited amount of things that are on their convey list. Built-in appliances and built-in furnishings are included specifically, as are in the neighborhood contract. They're implied because they're fixtures. If they're attached to the wall and built in as and part of the home, then they convey as fixtures. Smart home features convey. Again, let's take the Ring doorbell. A Ring doorbell is obviously attached to the wall when you go up to ring it. By virtue of the fact that it's attached, it's almost built in terms of it's attached. So it's generally considered to convey because of the way it's attached to the home. If if the seller doesn't want the doorbell or an attached fixture like a camera or whatever, or a speaker that's attached. Now, again, that gets back into the bracket, but if the unit is directly attached to the structure of the house, it's considered a fixture and it conveys. However, it can always be put on the exclusion list if the seller wants to take it with them. Other things that are important are if there's any home automation. There's a lot more home automation that we have. Many times there'll be an iPad or a tablet that allows the homeowner to change features, adjust lighting, that sort of thing. Remember that that's an integral part of the home automation system, and the software and if it's a rented or leased software, or that all needs to convey with the home. So, the NABOR contract is very specific about the number of parking spaces, not just 2 parking spaces, but A101 and A102 specifically, or if it's a storage unit, or if it's a boat dock or a cabana, those are numbered specifically, not so provided in the FARBAR contract unless specifically referenced in the items that convey. And again, both contracts, when you get deep into personal property that's other than what's listed in the contract, if there's financing involved and there's any type of furnishings, turnkey features, things like that are not specifically referred to in the contract, and there's financing, always consider having a separate personal property sales agreement and separate inventory, because chances are that the lender will ask you to take it out. Offer and acceptance and closing date. The effective date in both contracts is the last date signed and delivered, and dated. Okay, so the effective date is day 0, and it's based on the last date either party either initials or signs and dates the contract. So as a matter of good practice, always have your buyer or seller initial any changes to the contract and date them, because if you just initial them, everything reverts back to the last initial date, right? So one of the things that can get you into trouble is if everybody initials a number of changes, the contract goes back and forth. And remember, we have 10-day, generally shorter inspection periods. We have deposit dates due. We have everything that's due based on that effective date. And if there's a couple of iterations of the contract with no initials, you could lose a few days on your effective date. So be careful with that. Always, I know in a dot loop, the initials, the date is always included in the initial box or the signature box. In DocuSign, it's not. You have to separately move in the date signed field. So be careful of that one, especially when you're using DocuSign, that whenever there's a change, your customer initials and dates it. Interestingly enough, closing is much better defined in the FARBAR contract as when all funds and documents received by the closing agent on the closing date at the time decided by the closing agent. In the NABOR contract, we don't specifically define what conditions create closing. So sometimes there can be disputes, I guess, when the seller says, I'm not giving up my keys because I haven't got the money in my account. In the FARBAR contract and in the spirit of the NABOR contract, once the closing agent says we're closed, we're closed. That can mean that they just initiated a wire to the seller, but it doesn't necessarily require that the money be in the seller's account. So be careful about that. Try to use your closing agent as your guide as to when closing has actually occurred. So the Consumer Financial Protection Bureau has a couple of different rules that can affect contracts. The one that's referred to in this slide basically is if your buyer has a clear to close and the lender cannot get the package to the closing agent on the closing date where funds can be dispersed, then the buyer has the right in the FARBAR contract for up to 7 days to extend, and in the NABOR contract up to 10 days. The buyer must have a clear to close, In the NABOR contract, they must have waived their financing contingency, and then they need to notify the other side that there's a problem that's purely lender related. If the lender's waiting for an additional tax return or additional documents from the buyer, that does not constitute an automatic 7-day extension. I've had agents say, oh, I get 7 days. Well, or 10 days. No, you don't automatically get it. You have to meet the criteria for the CFPB extension. Clear to close from the buyer in FAR/BAR, clear to close and waive financing contingency for the buyer in NABOR. Please stop me if you have any questions as we go through this. In FAR/BAR, there's a checkbox that's very important. It says that the buyer may assign the contract and be released from liability. It says that the buyer may assign the contract but not be released from liability, or may not assign the contract. So if the buyer decides to take title in a different form, let's say it's a trust, or they want to form an LLC, and they've checked may assign and not release, they can do that. If the box is checked may not assign, then they would have to have specific written permission from the seller to allow them to take title in a different way. So I always recommend when you're writing a contract, ask the buyer how they want to take title. Because if they're going to change their mind in the FAR/BAR contract, they really have to have permission to do so. In the NABOR contract, all NABOR contracts are assignable without release of liability to the original buyer, and that can be done up to 15 days before closing. For a while there were buyers assigning contracts to other buyers, but for a long time it's mainly just been land, right? We can assign a land contract, and we see it where a buyer will buy a piece of land or have a contract, and then another buyer will come along and say, I'll pay you $5,000 more. That's fully acceptable in either the NABOR or the FAR/BAR contract, so long as may not assign is not checked in the FAR/BAR contract. In the NABOR contract, it is a right of the buyer to assign up to 15 days before closing. There is a assignment form in the NABOR library, and in the FAR/BAR, an attorney should prepare a formal assignment and make sure that all parties agree to the terms of the assignment. In the NABOR contract, there is a seller, there's a form to notify the seller of an assignment. Now, remember that in teaching these contracts, there's usually always blanks throughout them, and many of them have defaults. And my thought is never leave something blank, because I don't know whether you didn't catch it for your customer or whether or not you intended to leave it blank. So I like in the FAR/BAR contract, there's a little asterisk next to every line that requires some response. And I advise you to check and make sure that every one of those lines that has an asterisk on, you've considered and reviewed it with your customer. In the NABOR contract, that's not the case. Okay, so how do we pay? The payment of cash is not supported by any type of contingency to the customer. And the box just basically says you can still get financing, but your cash, you have no protection. And therefore there's no financing contingency. In the NABOR contract, the buyer can obtain a loan, but doesn't have any protection if they're unable to obtain the loan and close. So actually our brokerage has a release form that if the buyer says, I'm going in cash because I want my offer to be stronger, and you say to the buyer, Mr. or Mrs. Buyer, do you need that mortgage to be able to close? And if they say absolutely, we have a buyer's notice that we ask them to sign saying, I understand I'm going in cash, and I understand that if I can't close on time, my deposit's at risk because I have no contingency. And there is no window of an automatic extension of 7 or 10 days because it's cash and cash has been checked. If there's financing, the contracts are pretty different, okay? In FAR/BAR, there's a 30-day loan approval period, which can be modified, but it defaults to 30 days. In the NABOR contract, typically the financing contingency waiver or the period of time in which the buyer secures financing defaults to 45 days, okay? The appraisal is part of the contingency now in the FAR/BAR contract, effective with their last update in 2022. So it used to be that there was a property-related condition where the buyer could get out toward the end of the deal if the appraisal came back and it wasn't sufficient to grant them the loan they were applying for. In the NABOR contract, if the buyer wants to get out, there has to be proof that they applied for the loan and were not able to get an approval. All right. Now, the FAR/BAR contract after the 30-day period, which is a critical calendar date in the FAR/BAR contract, after the 30-day period, if the buyer either has to notify the seller that they cannot get their loan, get their money back and move on, that they can get their loan, in which case the contract proceeds with the buyer's deposit at risk. For some reason, they don't notify the seller has a 3-day window to cancel, or the seller can say, I'm moving forward just as though I got notice from the buyer and the buyer's deposit is firm. So the contracts work entirely differently, and it's important to know the differences when you're representing a buyer. All right. The buyer in the NABOR contract has to provide a note from the lender saying your credit is not good enough to borrow the amount of money that you've asked for on page 1 of the contract. So there you go. Here's a case that Sam has put in for the situation here is I've had this happen in the buyer applies for, checks the box for FHA, and then they find out that the condo is not approved for FHA loan and they've got to go back to conventional. You need to really notify the seller at that point and get the seller's approval, because otherwise the seller could say, you've changed your loan product that we agreed to in the contract, but you didn't notify me, and therefore you're in default under the contract. So you could risk the buyer can risk their deposit by changing their mind when they want to do a different type of loan. So basically, the court said there never was a loan approval as defined in the contract that would allow this court to look at the terms of loan approval and decide whether the appraisal of property was insufficient to meet the terms. So the court strains itself to give the deposit to the seller. So be careful about that, and be careful if your buyer is changing the type of loan they're getting, that you always notify the other side. So here we're talking about the HOA and condominium association language. All right, and they're very different as is the financing. Get another button. Yeah. There we go. So let's take a look here. The language for the HOA statute and the condo statute are all contained within the NABOR contract. In the FAR contract, you have to use one of the riders, rider A for condos, B for HOAs. The approval and right of first refusal is disclosed in the rider, and the association fees are also disclosed on the rider in FAR, as are special assessments. The default is the seller pays all special assessments due before closing. The NABOR language is quite a bit different. The seller pays all assessments due before the effective date, not before closing, and the seller has to properly notify the buyer of any assessments after closing, or could have to pay any amount over 1%. The buyer has to investigate and understand the community requirements and also the required statutory disclosure. So the rider is a little bit more disclosure of fees, whereas in the condo in the NABOR contract, you have to supply the buyer with 7 documents, of which the budgets are in, the financials are in there, and the question and answer and all the details about the condo. In the FAR, the buyer can request those documents or not request them. In the NABOR, you're required as the listing agent and seller to provide that information to the buyer. So there's quite a few procedural differences that are contained in the 2 contracts. The issue really is the NABOR contract basically says, look, we're going to follow the statute. If it's an HOA, you've got to provide the HOA disclosure to the buyer with the correct association name and the correct amount. The first page of the FAR rider has the same language in it that is in the statute for the homeowner disclosure. Has to have the correct name of the association and the correct amounts. The second page of the rider allows the seller to detail any special fees like restaurant minimums or anything that's special to that community. If it's bundled golf, the bundled golf fees, anything that's over and above what's required for just the quarterly or monthly or annual HOA fees. So be careful that you understand the differences between the philosophy of both contracts. NABOR puts the statutory language right in the contract and expects that for an HOA, the HOA disclosure is provided by the seller and the listing agent to the buyer, and also the 7 condominium documents, and of course the confirmed receipt of the documents. So they're very different in the way they go about it. And a lot of people approach the NABOR contract and say, well, there's nowhere I can disclose the condo fees to the buyer. So they send over an HOA disclosure with the condo fees on it. This is a no-no. It's not binding and it's not meaningful. So please don't do that. Please send over the documents that are required by the statute, the 7 documents, and have the buyer sign for them. Title insurance, the title insurance in the FAR contract is a checkbox. Seller picks, seller pays, buyer picks, buyer pays. In the NABOR contract, it is different. The buyer picks the title agent in all cases. And if it's in Collier County, buyer pays for owner's title. If it's in Lee or Charlotte, the buyer picks, but the seller pays. So a lot of people that are used to the FAR bar and used to Lee County procedures are somewhat usually taken aback by the fact that in the NABOR contract, the buyer picks and the seller pays. All right. In the FAR bar contract, it's a checkbox. And if the box is checked, the seller picks and seller pays for title. And if in the other checkbox says buyer picks and buyer pays. So it's a checkbox in FAR bar and it's in the contract language in NABOR. Obviously, you can always override it if you want the buyer to pick and pay in outside of Collier. You can easily write that into the contract. All right. That's about it on there. The buyer pays for the lien search in the NABOR contract, and that's very important because that lien search protects the buyer from any open permits or expired permits. Inspections, again, night and day. FAR bar contract provides for 3 buckets: general repairs, wood destroying organisms, and permit. The 3 buckets are separate, and there's an amount that's put into each of these buckets, which is the maximum the seller has to pay for repairs or wood destroying organisms or permits. So the default is 1.5% of the purchase price, and in many cases that may not be enough. If you've got a $400,000 property, that's $6,000, which may not pay for a significant repair if it's needed. So there's a threshold amount, and when the seller gets that and accepts it, they do not have to pay a penny more than that threshold to make any type of repairs. So be careful if you're representing the buyer. You have not a more modestly priced house. Maybe you need to put a little bit of additional money in there to make sure your buyer is covered if there's a problem. The repairs exceed the limit. There's a very small window where either party can terminate there, and it has to do with no communication between the buyer and the seller other than what's in the original document. But if the parties are communicating back and forth, the seller can then say, okay, I'll repair everything, or I'm only going to repair up to that amount. What, Mr. or Mrs. Buyer, would you like me to repair? So if the total defective item cost is greater than that limit, then the buyer is required to select the repairs that they want the seller to make, and the seller's not obligated to make any more than that. So you have to be really careful with that. And of course, in the as is, there's a free look for both contracts. The problem with the free look is it's a free look, take it or leave it, as the way it's written in the contract. But what seems to be standard operating procedure is I get my free look and then I ask the seller for a credit or for repairs or for a price reduction. And really, that's not in the spirit of the contract, but I would say probably better than 80% of the time, the buyer will ask the seller for some modification. Seller's not obligated to do it, but if it's a defective item that the buyer's brought to the seller's attention, the seller either has to deal with it with this particular buyer or disclose it to the next buyer. So if I find out as a seller that my air conditioner doesn't cool to the proper differential, I know that now, probably my agent knows that. And when the next buyer comes along, do we have to disclose that defect to the seller or new buyer? The answer is yes, especially if it's material. So in NABOR, there is no repair limit. There's no buckets. The seller is responsible for addressing defective items as defined in the contract and addressing everything up to whatever amount that it takes to either repair it or give a credit to the buyer for repairs. So there's a big difference in terms of no threshold for defective items in the NABOR contract for the seller to repair defective items. There's a definition of defective items in each of the contracts. They're slightly different. But in this particular case, once the buyer can make request of the seller to address any defective items with no ceiling on or threshold on what they have to pay to repair. There is a clause in there that the seller's limited to fair market value of the item in working condition. That's true. But in an as is, a lot of times the buyer will say, well, I want a new air conditioner, even though the air conditioner is working, it's maybe older or rusty. And that's where we differ, because in the regular contract, if the system is functioning the way it's supposed to function, operating in the condition it was designed to, working condition, then it's not considered defective. So in the FAR contract, the buyer must make request for repairs in each of the three buckets from the seller prior to the end of the inspection period. So if I have 10 days to inspect, I have to, by day 10, make a written request to the seller saying, here's the repairs that I want. And the seller then has 10 days to respond. In the NABOR contract, it's a little bit different. So I have up to 15 days or whatever the inspection period is to make my inspection as a buyer. I then have 5 days after the end of that period to make my request to the seller. The seller has 10 days to respond, similar to FAR. I make, as long as I make my request prior to the end of the inspection period, the seller then has 10 days to respond. So this is a little different in NABOR in that you have 5 days after the end of your inspection period to submit your request to the seller. The seller has 10 days to respond. And the last 5 is, if I am the seller and I counter the buyer's request for credit, or I refuse to address a defective item, the buyer does have a 5-day window to cancel and get their money back. So there's forms provided for called the buyer's request and seller's response, and then there's a detailed list that the buyer can provide showing individual itemized results of what they want to ask for as far as defective items or credits. So here is on this slide, they're comparing the differences. So make sure you go into the contract itself in a regular FAR or regular NABOR and take a look at what exactly they're very similar, but there's some differences. Torn screens are considered defect in the FAR contract, but not in the NABOR contract. So there's some differences in terms of what a defect is. So in the NABOR contract, if the buyer wants a credit and they're making a request for a credit, they have to submit in writing a quote from a licensed professional to substantiate that credit request. That's probably, as I look at all these contracts, that's probably the one thing that is misunderstood about submitting a repair request to the seller, is they just put in seller will credit buyer $5,000 at closing, and they don't include anything but from a licensed contractor to substantiate the $5,000. In that particular case, the seller is not obligated to even consider that request because it's not been submitted properly. All right. In terms of if I have a dispute in FAR, I submit a request to the buyer or to the seller for a credit of $5,000. I have an estimate with it, and I submit it all. And then the seller goes out and gets their own estimate, and they're different. The contract says, okay, if you can't agree on that request for credit, you can you split the cost of a third party who then will decide on what the correct amount of the credit is. And, once you've gone to that third party, the parties are agreeing to abide by what the results that they get from a third expert. Open permits have a little bit of difference. 5 days before closing to find them, but not in the NABOR contract. If your municipal lien search is not completed by the end of the inspection period, you are allowed an extension to get the municipal lien search back and make your request. It's the one area where a buyer could extend the inspection period, but only for open permits. All right, so this slide is dealing with open permits and unpermitted improvements, okay? In FAR, as we talk about, the buyer always has to notify the seller prior to the end of the inspection period. The seller has 10 days, again, to get estimates and deliver them back to the buyer when the buyer's made a request to close an open permit. And again, remember, there's a bucket there where we've established the maximum amount. Seller has till 5 days before closing to close permits. And there's a 10-day extension allowed for inspections if there's permit issues. If the costs exceed the permit limit, seller fixes all or buyer takes a credit. So it's a little bit different than the general repair item. So we do a permit search called the municipal lien search in NABOR within 5 days of the effective date. The permit election is extended to 5 days after the permit search is received. So the reason that was put in there was because sometimes the closing agent cannot get the municipal lien search done during the inspection period. So the contract allows the election period for permit search only to be extended to 5 days after the permit search is received. In no way does any of that allow the closing to be automatically extended without the agreement of all parties. So here's an interesting difference between the two contracts. In FAR, they define force majeure being, any hurricane, tornado, windstorm, pandemic, endemic, all these. It's a long, drawn out definition of what force majeure is, and it has to do with any type of external hazard beyond the control of the seller. And it's a defined term. So what it does is it says if any of these conditions occur and the closing has to be delayed, it automatically can be moved 7 days. And if it goes beyond 30 days, then either party can terminate. So what we noted after Irma and Ian was that a lot of places didn't have internet service, they didn't have power, and the buildings weren't destroyed, but closings couldn't take place. So this allows an automatic extension up to 7 days and a maximum of 30 days. Either party is able to cancel. The NABOR contract has no force majeure. It does have a risk of loss paragraph. But in the NABOR contract, the seller is responsible to bear the risk of the casualty and do the work required to restore the property to the condition it was in at the time of contract. The caveat to that is the landscaping limit is 1% of the contract price. So yes, the buyer has to restore the structure to its original form and have it CO, but trees and landscaping limited to 1% of the contract amount. NABOR automatic allows a maximum extension of 30 days after a casualty event in order for closing to take place. If the property is condemned or uninsurable by the standard of citizens' property, basically either party can terminate, but generally it goes the buyer. So the difference here in really the difference is at the bottom here. In FAR-BAR, where we said in NABOR, the seller bears the risk of casualty and is obligated to make the repairs with or without insurance. In FAR-BAR, there's a very low bar of 1.5% of the purchase price when either party can cancel. So 1.5% is not a whole lot considering some of the damages we saw from Ian and Irma. And so the seller can elect to repair more. They can elect to give the buyer a 1.5% credit and turn the property over to them as is, or the buyer can say, I'm out. And 1.5%, even on a $500,000 property, is only $7,500, which is not a lot considering the type of damage we saw. So the bar for a buyer being able to cancel is very low in the FAR-BAR contract. So again, we have time of the essence. And in FAR-BAR, all deadlines are time of the essence. You miss them by 1 day, there's a default that occurs. So you got to be very careful to not miss a deposit deadline, because remember in FAR-BAR, all deposits are at risk from day one. In NABOR, only the deposits made to date are at risk. So you have to be very careful in the FAR-BAR contract that you meet all deadlines or get them extended if there's a reason for the buyer to need an extension. All right. So in the question, apparently there is a legal case here that does say that the deposit, especially the second deposit, is so important that, you know, it could be considered default. Not for sure. The important thing to know in the NABOR contract is that if a date is not time of the essence, and the only time of the essence date in the contract is the closing date. So let's say the buyer is a day late on the deposit. All right. You can then notify the buyer that they have 2 or 3 days to cure the deposit. But you have to notify them and say, look, I'll give you till Wednesday, close of business. If you don't have the deposit in by then, I'm going to consider you in default. And that gives you the ability to at least take the deposit that's been made to date by the buyer. So you must create a default situation in the NABOR contract. In the FAR-BAR contract, since all dates are time of the essence, that's it. So obviously we just talked about in the NABOR contract, the seller's only remedy for a buyer default is deposits made. if the title is marketable, the seller has to sell or be sued for specific performance. And obviously, if the prevailing party gets their attorney fees paid. So in FAR/BAR, all deposits are at risk at day one, whether they've been made or not. And therefore, there's more risk to the buyer if there's any kind of buyer default. The seller again must sell if the title's marketable. The contract does call for mandatory mediation, whereas in the NABOR contract, there's no requirement to use mediation to resolve the disputes. So that's the end of the slides. Again, I like this because it's a little bit different way of showing you the differences between the contracts. I do have, and we won't spend time going over all the details, but I do have our version of this, which is, whoops. There we go. Try it again. Can you see that okay? Okay. So this is a comparison matrix that I've prepared. You're welcome to it. Just send me an email, I'll send it to you. But basically, it's comparing the three versions of contracts in Florida. The two most popular, obviously, are FAR/BAR and NABOR. And so the Florida Realtors maintains the contract for residential sale, purchase. The contract isn't widely used. It's maintained by Florida Realtors. We used to see them coming over from the other coast, but we don't see them too much anymore. So not a contract you really have to worry about. You could get one, and then you'd have to really refer to it, but it has a much different look and feel, and you'll know if it's not a FAR/BAR coming from the Florida Realtors world. So here we again go through each item in the contract, right? And what are the differences between the contracts, right? So again, we talked about time of the essence. The effective date is last date parties sign or initial. The inspections are 15/5/10/5, or in FAR/BAR, we talked about the three buckets. Again, defective conditions and cosmetic conditions are slightly different between the contracts, and it's obvious, and you really need to share that part of the contract with your customer. If it's a buyer making requests or a seller considering buyer's requests, that cosmetic defective standard is pretty important. And the thing that I always say is, you're in business to make contracts, to help contracts close, because that's how we get compensated. So the more you can do to keep the contract together through the inspection and correction process is to try to ignore little things that are cosmetic, that don't mean anything, because you don't want to deteriorate the relationship that buyer and seller have. What if the buyer needs an extension at the end because of a situation with their loan or family situation? If you've gone to battle on cosmetic items, sometimes that can affect the relationship, and hopefully you try to diffuse those kinds of things in preparing the request that the buyer's making to the seller or the seller's responding to the buyer. Okay, we talked about HOA differences. So this is a comparison matrix. There's a detail matrix that goes with it that refers back to the line numbers in the contracts. And again, if you like this, I'll be more than happy to send it to you. It's a little bit of a cheat sheet. You can kind of keep this one, you know, it's only a couple pages. You can kind of keep this one with it's handy so you can compare the differences when you get a hold of a contract that maybe you're not real comfortable with, or you're writing a contract you're not real comfortable with. As always, you can always send them to me. I'll be glad to take a look at them. I look at a number of contracts every week. And if you're unsure about a particular provision, or you want to know, you know, what some of the issues are with the contract, you're always welcome to email it to me. So there you go. Notice has changed in all contracts. There's no texting anymore. And thank goodness for that, because some text were very, some of the stuff is very confusing. And, you know, it's a good idea to be able to compare side by side and see what's going on. Assessments, again, remember, a CDD balance is assumed. And in FAR/BAR, it says prorated, it's the same thing. The buyer assumes whatever's left on the balance in all the contracts, and that is defined in a CDD addendum that shows the balance that the buyer is assuming. It's the only automatic assumption of a debt that's in the contract. The rest of it has to do with your HOA fees and any claims or any timed payouts there are to the condo for improvement or a insurance situation. So we talked pretty extensively about the financing contingency and the differences. They're quite a bit different. And here are some of the differences. The last thing, obviously, we talked about a checkbox in FAR/BAR and CRISP, and then the NABOR contract is just written as this is the way it is. There is no checkbox. In default, again, the defaults are a little bit different. The buyer can seek specific performance in either case. They could ask just for a refund of their deposit or any expenses they've had. Again, the buyer default, the seller can make a claim to deposits that are paid as of, you know, as of the time the request to discontinue or a default occurs. In FAR/BAR, there's a mandatory dispute resolution. Mandatory mediation is required before the thing can go to court. Alrighty then, so there's two different ways to compare the FAR/BAR and NABOR contracts. And like I say, there's a companion to this that shows the individual line numbers where each of these things are. If you like it, jonesnaples@kw.com. I'll be glad to send it to you. All right, that's the end of today's class. Thank you so much for attending. Hope you got something out of it, and good luck out there. Please feel free to reach out to me with contract questions. I'm happy to look at a contract if you'd like before you send it off, and let me know how I can help. All righty, have a great day. Thank you, Jennifer. Y'all have a good afternoon. Thank you, Leandro. See you now.